It took fewer than 8 days for Sam Bankman-Fried to go from being nicknamed the King of Crypto to his company filing for bankruptcy and him stepping down as chief executive. Sam Bankman-Fried, the founder of FTX, was the richest man under the age of 30 with a net worth of $27 billion. But now his net worth dropped to zero. This is the story of a man who lost billions within a week. The story begins in 2017 when Sam was a traditional Wall Street professional working at a trading firm called Jane Street Capital. There he specialized in trading international ETFs, but in 2017 he discovered an opportunity to trade something far more lucrative, Bitcoin. So he founded Alameda Research in 2017. At the time there weren't many cryptocurrency exchanges with millions of users and a lot of money. The majority of people only use exchanges to buy and sell crypto, while storing the majority of their holdings in cold storage wallets. So there was a lot of low volume on many exchanges, which caused price differences. For example, Bitcoin may cost $10,000 on one exchange, while it may cost $10,100 on another. One can immediately make $100 on each Bitcoin, bought if he were willing to purchase it on the first exchange, transfer it to the second, and then sell it. With his first company, Alameda Research, Sam set out to accomplish exactly this. They made a lot of money by trading cryptocurrency. Sam quickly decided he needed more. He wasn't just interested in cryptocurrency trading. He claimed that he wanted to assist others in doing the same. Therefore, in 2019, he built the exchange FTX. However, there was only one problem. He required funds. Fortunately, the company has raised an impressive $1.8 billion from major players like Tiger Global, Blackstone, and SoftBank over the past 4 years. Binance was also one of its initial investors. However, FTX experienced rapid expansion and emerged as its primary rival. As FTX grew in the industry, Sam's net worth reached a high of $26 billion. You couldn't tell by looking at him. He drove a Toyota Corolla and slept in the office on a beanbag. He did splurge a bit, though. He lives in a luxury penthouse in the Bahamas with a golden doodle named Gopher and 10 roommates. Apparently his roommates all dated each other at some point. Let's get back to FTX. As its name suggests, the FTX exchange makes cryptocurrency trading easier. They will locate a buyer if you wish to sell something. They will locate a seller if you intend to purchase something. FTX made money every time they processed a transaction. It also gave customers loans if they were willing to bet big. Naturally, the exchange charged interest on this. And for the most part, this was a neat little business model. But, as you might have guessed, brokerages often get greedy and look for creative ways for generating extra revenue. In addition to making money from interest income and transaction fees, FTX introduced their own cryptocurrency token FTT. Additionally, this coin appears to be the root of the near collapse. FTX gave itself some self-worth by promising all FTT token holders preferential access to their trading platform, lower fees, pre-withdrawals, and other benefits. Soon, the token began to exhibit promise. The cost began to gradually rise, and to prop up its value even further, FTX began buying its token using a portion of its actual revenue generated from transaction fees. By purchasing their own coin, they were boosting demand. This sounds wonderful. However, how does this benefit FTX? Well, this is where Alameda comes in. Sam has persuaded everyone for almost 3 years that the two entities operate independently of one another, that there isn't any funny business going on here. But that isn't true. There have always been a lot of FTT tokens owned by Alameda. Nobody knew how much, but they knew that they had acquired it at a very low price. So the price of FTT began inching upwards. The value of Alameda's assets also began expanding in tandem. Their balance sheet grew in size. And there's something you should know about balance sheets. If you have more assets, you can borrow more money. And if you can borrow more money, you can deploy that capital and hope to make even bigger returns, especially if you're a prop trading firm. So it seems Alameda bought FTT tokens at low prices, waited for its value to explode, and then began borrowing real money using these highly inflated FTT tokens as collateral. But wait, who on earth is offering real money loans to Alameda by accepting FTT tokens as collateral? Well, nobody knows for sure, but the allegation is that it was at least partly funded by FTX, that it used customer funds to make out loans to Alameda. All was going well until CoinDesk leaked a document that showed that Alameda held an alarmingly large amount of the cryptocurrency created by FTX called FTT. The document revealed 40% of Alameda's assets were FTT tokens, whose value could tumble very quickly. And if its value did tumble, then Alameda would be in a lot of trouble alongside FTX. And that's exactly what happened. Once people began seeing this story, they began withdrawing their deposits. But the company never had enough cash and collateral. And the nail in the coffin came when Binance founder CZ announced that he was going to sell all the FTT tokens he had owned, citing recent concerns. This essentially sparked a bank run, causing FTT to fall back to where it started, meaning that FTX's collateral was now worth a lot less. And yeah, boom. $6 billion withdrawn in 72 hours. FTX was going down. Binance offered it a lifeline by agreeing to acquire the company, and it seemed FTX might have solved the liquidity problem. But on 9 November, Binance announced on Twitter that it was backing out of the deal with FTX. Next day, the Wall Street Journal stated that FTX used customers' money to fund risky bets made by Alameda. On November 7, 2022, Sam Bankman-Fried woke up with $16 billion on November 8. His net worth plummeted to less than $1 billion. According to the Bloomberg Billionaires Index, it's one of the greatest single-day financial losses ever. Bankman-Fried was the co-founder and CEO of the cryptocurrency exchange. On the 11th, Bankman resigned as CEO. He said, "I'm really sorry again that we ended up here. Hopefully this can bring some amount of transparency, trust, and governance." FTX and Alameda filed for bankruptcy. The new CEO of FTX confirmed that there was a hack. More than $370 million of crypto funds are missing. The company is cooperating with law enforcement. It could lead to criminal charges. We've already seen 2 brokerages collapse this year. Celsius and Voyager, and FTX may just be in addition to that list. Sam is devastated that his company is on the brink of collapse and that his net worth has collapsed from $27 billion to not even $1 billion. For customers, those are just big words. Crypto is still a new and relatively untested market. Despite the pains right now, many believe it is the future of finance. If crypto really is the future, then it must have some kind of regulations. Do you agree? Comment that down below. Also, drop a like and subscribe the channel if you want more such news. See you in next video.